Joining us more now is Daniel Ortisi from Stock Doctor. Daniel, great to catch up with you on this Wednesday. Of course, we just hit another record, intraday at least yesterday, on the market. We're seeing that Wall Street as well. What are your observations about where markets are at right now with that Santa Claus rally very much in play?
Yeah, good to be back with you, Andrew. And I think the the last part there is quite pertinent. The typical Santa Claus rally, or at least that eventual drift in markets towards the end of the year, unless there are any kind of exogenous events, which at the moment, that it's hard to spot any on the horizon, given so many events have already surpassed this year. So, look, from my perspective, the markets are still extremely strong. Despite a lot of factors, but I think it is kind of hard to say that we see a bit of a faltering, particularly before the end of the year, given that we typically have a positive drifting at the end of the year, Andrew. So, good news in the jobs data last night from an economic perspective. But it wasn't good enough to really change the expectations for rate cuts either. So it was almost in that perfect spot in the JOLTS data. So, still a lot of things to monitor. But yeah, that positive drift in the markets, we certainly think that's going to continue unless there's any exogenous events.
All right, well, just looking sector-wise, at least with a focus on commodities. Oh, actually, we did see gold move higher overnight. Those moves, though, were paired, I guess, off the back of the jobs data. Nonetheless, what are you seeing with gold at the moment, given it did come off with the election of Donald Trump? It's starting to regain some of those moves, though.
Yeah, look, I don't think we're too surprised to see gold somewhat correct after the result of the election, purely just from a risk premium point of view. I guess after that level of uncertainty in markets and volatility in markets, gold tends to be, negatively correlated with that. So we saw that event kind of surpass, gold kind of reacted, and we know that's a heavily traded asset class. And there's a lot of people sitting on profits in the gold market. So I guess we weren't too surprised to see that initial correction. If anything, I thought it might have kind of cascaded into a, further selling, but it's actually relatively held up, which is a signal to me in the short term, at least, that there are still a lot of people seeing a strong rationale for an allocation to gold at this point in time. So there are a lot of things that I guess are talking points for gold, particularly in the last 12 months. It's kind of dislocation from its traditional negative correlation to real yields has been a surprise. The counterpoint to that has been the perception of potentially higher risk premiums in things like treasuries with the growing budget deficits, particularly in the US, and obviously the geopolitics as well. But there has been, I guess, some level of de-escalation, but I don't think, I'm not sure if the market thinks that that's going to be kind of sustainable moving forward. We'll have to kind of wait and see, but I can see a case, a bull and a bear case for gold at this point in time. But just given some of the uncertainties, and particularly, I guess, the uncertainty around Trump's fiscal policies and what that means for the deficit going forward, I certainly think gold has a place to play in any portfolio at this point in time, Andrew.
Well, Daniel, given that appreciation of the gold price, it has prompted M&A in the sector, certainly locally. The big news, of course, at the beginning of the week with Northern Star making that play for De Grey. What did you make of that?
Oh, that was really surprising, Andrew. And the reason why is because, the company has been, effectively looking to sell itself for a long time now. It's had an open data room for many, many months, if not years, given it's gone through its studies and financing package and ready to head into development. And it really looked like it was going to go at it itself, particularly after that significant equity raise only a few months ago to shore up capital for development. And literally just before they hit the button, just before they started to draw down on project financing, which effectively, locks them in to those arrangements with their lenders and potentially even royalty agreements, Northern Star came into literally the 11th hour here, which was a surprise because, not only do we have record gold prices, but Northern Star itself has gone through its most significant investment program at the Kalgoorlie Super Pit, and it has, many times stated that the next steps for the company is to invest organically in some of its, I guess, aging assets. And certainly in the company's history, it doesn't really have a track record of acquiring significant development projects and building itself. It's always been an acquirer, or I guess it built its history of acquiring, aging assets off majors and extending the mine lives and extending reserves and adding value through operations. So a bit of a surprise. A lot of analysts are kind of shocked, and it could be, I guess, a negative signal as to what the company thinks about its own internal growth projects, given it's willing to give up 20% of its script, its market cap to De Grey, with still a lot of project execution risk to go. So, I think it's a bit of a surprise by Northern Star. We'll wait and see if there are any other interested parties. Of course, we've seen the reports of the parties who are interested in the past, but I think this is going to be a bit of a negative overhang for Northern Star in the short term, Andrew. A lot of uncertainties to come with this deal at a pretty big price, if I say so myself. $5 billion for the total project. I think that's one of, if not the largest price tag for an undeveloped gold project that's ever been seen before.
So, what are you liking then in the gold sector?
Yeah, well, look, in my view, it just goes to show that perhaps some of these majors, particularly in Australia, with those operations in Australia, want to grow in Australia. They're seeing their asset base get tired. They're seeing reserves dwindle, and they need to look at new projects for growth, certainly. So I still think the mid-tiers is really a great hunting ground for people who are willing to do kind of the bottom-up research on these gold miners. And there are a few, I guess, who have underperformed, but one for us, which is, very, very, I guess, strong management team and has performed exceptionally well in the gold space, has been Capricorn. And the reason why we like that is because it has, a well-funded plan for growth internally with the Mount Gibson project, and obviously secured another 200 million to really reduce any project finance or hedging that it would have to undertake for that development. Just generating significant cash from its existing operation in Karlawinda, and the fact that it's got low costs, high margin, very low percentage hedging, and a development project in the near term, which has been delayed, but certainly an expectation that it will get full kind of permitting approval in the near term. I still think that's a very solid option in the space. Valuation has always been, I guess, the talking point for Capricorn, given it does trade at a premium to its peers. But when it's got such a quality management team and asset base, and has really been, tracking the gold price well relative to its peers, and it hasn't had many operational falters, I just think that's the kind of quality we're looking for. And we've seen that companies are willing to pay premiums for quality assets. Certainly with Northern Star's bid for De Grey. So I think that's kind of a pick of choice in the mid-cap space for ours, Andrew.
And Daniel, let's take a look at iron ore, what you're seeing there, particularly off the back of the most recent steel data out of China.
Yeah, it's certainly been interesting. I mean, we've had 3 months now of I guess production heading significantly upward, production data coming out of the steel mills in China. That's obviously been in response to the stimulus that we started to have a few months ago, which led to a decent rally in steel prices, albeit very, very low relative to historical standards. And obviously that bump up in steel prices has led to much stronger than expected levels of iron ore imports and production. So, we've actually seen the brokers somewhat turn pretty positive on steel and iron ore for at least the next 3 to 6 months. And the reason why that's important for analysts to follow is that, we've actually been through this cycle of obviously downward revisions and downward expectations in iron ore and steel prices. So that's followed through into analyst models and price targets and expectations. We've actually kind of seen that somewhat inverted, and we've seen, price targets and expectations for earnings off the back of iron ore prices actually head upwards in the last few months. And certainly if we kind of have these levels sustained and further Chinese stimulus keeps that steel price higher, then I think, we're going to see net upgrades, which is why we've seen stocks like Fortescue, which is heavily leveraged, rally pretty strongly in the last month or two as well, off a base of 15, now back to the $20 level. So that's a bit of a watch for me. I'm waiting to see how these companies react. The big reason why is because there are a lot of players in the space exposed to iron ore, which, for one reason or another, really hasn't recovered. And I think one to discuss certainly is Mineral Resources with their project in development at the moment in Onslow, because despite all of the issues the company's gone through, an iron ore price of over $100 a ton and a fully ramped up Onslow is, that's going to be a significant cash generator for Mineral Resources. So if we can finally have a few kind of months of positive news flow for the company, this is one I'd be watching quite closely. But it's all got to do with that Onslow ramp up expectations, Andrew. If there's further signs of weakness there or any signs of weakness there, geez, I think this stock can head significantly lower, just given where the management pressures and the balance sheet pressures have been. But certainly one I'm watching very closely on this upward revisions in iron ore prices.